Good morning, everyone. This is Corey Mitchell, TradeThatSwing.com. We're going to be looking at the trading the non-farm payrolls this morning. Comes out in about 5-6 minutes. And just getting ready for the day. I haven't traded yet. Starting right now as I start this recording. There's been a couple opportunities already. I usually start around 6 o'clock today. Sometimes it's pretty quiet leading into these bigger news announcements. So I would have been able to catch a little bit right here, basically. But other than that, it's been pretty quiet. So don't mind. Yeah, just about at a 2.5 target there. So getting pretty close to news. We'd be looking at closing that out pretty quick if it wasn't hitting a target already. But, you know, decided not to take that one starting now and just setting up for the day. So what I'll do usually right at the start when I start trading is I'll just mark off the high and the low of the day. And then also any lows that the price hasn't visited in a while. So we have a little cluster of lows here. We have one here, one here, one here, one here. So this area is kind of a little domino area where if the price gets close to this, it'll often pop through to take out the stop losses that are sitting below these levels. And we will likely have one sitting up here now because we have multiple highs more recently. So this would be kind of a minor one. But I call these magnet areas, and it's just how there's no prediction involved in how the price is going to react when it gets to these. We do get a little pop through them if the price gets close, and then we're going to see how it reacts. So once it goes through that level or gets close to it, that's the end. That's the end of those levels. I'm not thinking the price is going to go zooming higher if it moves through here. It's simply, once it gets there, how does it react? Because that's going to tell us whether, if the price starts moving up again, great. If it starts rolling over, great. Either way, so we have the non-farm payrolls in 4 minutes. That usually causes a fair bit of volatility, so maybe we'll get some of these levels triggered. What we're looking for today, I trade double pumps and trend continuations, rounded tops, rounded bottoms, and those are pretty much the patterns we are going to be looking for today. Also double pump variations, that's just a little bit pretty much like a double pump, just slightly different. If the double pump doesn't quite look right to me, then I'll maybe give it a second, give it a couple more price bars, see what develops, and that can create a double pump variation. I recommend having your position sizes written down for the day, depending on stop loss sizes. So I usually write down from a stop loss of 2 pips up to 5 pips on a sheet in 0.5 pip increments. So 2 pips, 2.5 pips, 3 pips, 3.5 pips. And then in MetaTrader, which I have on my other screen, you can just punch in the stop loss. So since we're having news coming out right away, I'm going to assume that we're probably going to need a little bit bigger stop loss because the candles will be a bit bigger. So probably about 4 pips or so. Then I'll punch in my position size for that so that it's ready to go. And then I'll also have the sheet. So as maybe volatility contracts and we start to see more candles like this, along the bottom of my screen, this is just measuring the current candle pip size. So you can see 1 pip, 2 pips, 2.3 pips, 1.6 pips. A little hard to see, but I can see it. I guess that's all that matters. And yeah, so we've had some pretty small candles. So if we go back to that, then I would be dropping my stop loss size to 2.5 pips or maybe even 2 pips. And then I have my position size written down, so it's just an easy switch. In MetaTrader, I use if you right click on your chart and click market depth, we get a little pop-up window, and at the bottom of that pop-up window there is a stop loss, target, and position size slots. You can just put it in there and they'll stay there until you change them, and then basically all you have to do is click buy or sell to get into a position. So the news is coming out pretty quick here. No trades going into news. We don't want to be holding trades when the news comes out because we can get big spreads and lots of volatility. So even if you kind of pick the direction right, you can end up getting stopped out just because of a wider spread. So we'll just let it come out. I usually find I'm not usually taking trades within the first few minutes after the announcement just because it doesn't set up. We get these big whipsaw candles, but it is possible that we could get a trade right after. So I like to do something called scenario planning, which is basically we have these, what's going on right now, look what could possibly occur for me to take a trade right now, and nothing at the moment. Basically we need like a strong move down like what we had here, a pullback. This is a trend continuation type trade. We also have a history of the price move making pretty clean moves once it turns lower. Here we had a little bit of a pop-up after it started to turn down, but still pretty clean movement. You might have been stopped out once and then a winner on the second one. Here it makes a very clean turn off the top. We're in a little downtrend. Here made a very clean turn off the top once it started breaking below candle lows, recent candle lows. Same thing here. So pretty good history of price movement. This is what I call clean movement. I use one candle triggers in the sense that once I decide on a direction, I wait for the price to, so let's look at this example here. So we're in a downtrend, we pull back. Once I decide to go short, I'm just waiting for the break of the most recent candle low. So as we were going up, this little green candle was the last completed candle. So if the price breaks below that in real time, I'm taking that trade right there. So I don't need to wait for this red bar to complete. I can enter as soon as the price drops below that prior candle. So as I talked about earlier, these magnet areas, it's just interesting to see how the price reacts. So far it broke through there, cleared all the stop losses for the day. Anyone who was long and was using a stop loss from today just got stopped out. Excuse me. And so now we're going to see how this reacts. But the unfortunate thing is at the moment we had this massive drop, so I don't just want to buy based on the fact that this was a false breakout. What I'd rather start to see is maybe a little pullback which stays at a higher swing low, and then maybe we get an upside bounce from there. And the logic behind that trade is that if the price couldn't hold outside this level and we move back inside the old daily range, I have a concept based on the magnet area concept. It's covered in the EURUSD day trading course and a couple other of these free videos I've put online where I was live day trading. And once we get a wave inside this old range, and then we start moving back inside the range, so that situation I was just talking about, you know, it tends to work out much better. On the other side, if we had dropped out the bottom here, moved up, had a wave outside the old range and started to turn lower, I would want to go short because we had held outside the old levels. So this applies to day highs, day lows. It also applies to any time you get a ranging environment. If the price breaks out and can start making waves outside, you're probably going to have at least one more push in that direction. Trading is always about real-time analysis. It's not, okay, we broke out of this range back here and now we're going to go up forever. No, it just means that once we get a wave outside that old range right there, we get a trigger outside, we're going to go up for a while, but that doesn't mean it's going up forever. Then we went right back into a rounded top pattern here, and we had some potential short trades coming in. So I always want to be analyzing the price action. So here we have a bit of a, what I call a conflict, in the sense that we have this massive drop, but then we have a pretty big rally coming back. We have a smaller candle there, about 4 pips, 5 pips, Still pretty big, but in this whole context of things, for considering how much the price is moving, we just move 5, 10, 15, 20, 25, 30, 35, 40 pips in a minute. You know, 5, 10, 15, 20, 25, 30, 33 pips back the other way. So pretty nice strong movement going on. A 4 pip target with a 10 pip stop loss. Not crazy. This candle is going to be about 6 pips. That's a little bit bigger. So now the question is, do I want to use okay, so I entered there on this candle. I have a target 10 pips above it. Let's see how she does. As I said, we are a bit in conflict in terms of having this big drop, but it looks like it's gonna hit me. Come on. Yep, and we are out. Put in my exact trade levels. So we got in at 78.03 or 78, no, 80.03. And profit was at 100 or 10 pips, and stop loss at 4. Wow, monstrous move there. And then sometimes you end up getting a little bit different prices than you expect. Nope, I got out at 89.07. Because of some slippage or something, I might have, yeah, got a little bit worse entry. Oh yeah, I did, because I was thinking I was getting in right around here. Got maybe a pip of slippage or so. Wow, really big runner. So this is why those magnet areas are important. Maybe we might have one coming right back the other way. So with high momentum, as I said, the price will often move. So news, anyone who had a stop loss sitting above here was triggered out. That creates a bit of a domino. And then, as I mentioned, once there's probably stop losses sitting above here, once those trigger, boom, takes out those, and now we have the same situation which just happened down here. So we're basically waiting for either a push back up, and then we'd need a wave outside the old range and then push, or we're going to end up with this situation where we get a big decline, and then we start seeing a little push up that can't make it back to the prior highs, and we move back to the downside. So those are the scenarios I'm watching for. We could also have, it doesn't look, it would take quite a bit of time at the moment. We could have a rounded top, but a rounded top cannot start with a vertical move into the high, because then it's not a rounded top. A rounded top has to show slowing. So basically from here, what a rounded top would look like is we have a push up which doesn't really go much higher than this higher high. Then we drop below the most recent swing low. We have a lower high, and then we start to roll over again. So by this point, I'm already seeing like, okay, this uptrend's slowing. We broke to a new swing low. We're waiting for the pullback, and once that one starts rolling over, then I could take the take the short. But that would take at least several candles to develop. So right now it's more about just if we get a really sharp drop, then we could look at potentially taking a short. If we get a small candle, long a possibility, because we do have a really strong movement in here, so there is the possibility we could continue moving higher. So watching this candle size as well, always as this candle develops. So if we were to move up, that's a possible trigger. I don't know if I would take it because I'm a little leery of the fact that this didn't hold those highs, but still really strong momentum. So a bit of a conflict there between two of my strategies. So yeah, just tracking the size of this candle, because that tells me what the stop loss size will be. If once this completes and I go long, if the price moves above it, my stop loss size is going to be roughly the same size of this candle plus a little bit. So yeah, probably about 5 pips. Okay, so now I got, I'm just going to add up what that last profit was while I have a second. So to see what your actual R profit is, you take whatever you made on the trade and divide it by whatever 1% of your account is. If you're risking 1% of your account, if you're risking 0.5% of your account, you take 0.5% of your account. Yeah, that's unfortunate. Yeah, actually only ended up with 0.12 R there. So target, it's automatically deployed, and if there's a bit of slippage, sometimes it messes it up. Could have moved it to just above that swing high. Would have given me 2.5, but oh well, still a good trade. And so I would consider this a TC trade, trend continuation, just simply because we had a lot of upward momentum and we were basically looking for it to continue after a pullback. So this is, again, a bit of a conflict because, yeah, we had a lot of momentum up right now, but do I want to be buying into this kind of selling momentum right now? Maybe just wait, see what develops. Also, really big candles still. This last red bar, 8 pips. There's no way I'm going to use an 8 pip stop loss because then using a multiple of that, even at 2 to 1, price has to move 16 pips just to give you a 2 to 1. But interesting to see, you know, how it plays out, how things get rejected at these levels. So, well, we don't know what's going to get rejected, but in this case, we start having moves back inside the old range. That's generally a sign that the upward breakout failed. In this case, the downward breakout failed, and we started having waves inside the old range. So now these are all obsolete now because every stop loss of the day has been taken out by basically whipsawing the whole daily range so far. If we zoom out, this is when London started, so that was the day high, that was the day low. We took both of them out. So now it's a matter of what are we going to do within this range at the moment. Yeah, we still could break outside the old range, but who knows? So again, massive candle. It's even if you like the trade, I'm just not going to take that one because ideally you'd enter up here and have a stop loss below that candle. The candle's just too big. And like I said, we're in conflict because, yeah, we had a lot of upside momentum, but right now we also have a lot of downside momentum. Even though it's a little bit less than the buying momentum was, do I want to be buying into this, you know, near vertical drop? I don't. So we'll just hang out for a minute and continue to watch this play out. Still trying to figure out how that trade ended up so much off. what I was expecting to make. Yeah, interesting. All the orders kind of got a little messed up on that, maybe just because of a little bigger spread, more volatility. Either way, on actual results, multiplying the profit divided by what my 1R should be, 2.1R. So we can see this trade would have at least given us a chance to make something, but just like I said, even if you like the trade, I don't like the trade setup of it in the sense that we have this massive candle here. Now we kind of have the same thing going the other way. So we had this big drop, now we have a rally, and if the price starts turning over, we could have a trend continuation of this drop here. But again, we have big candles, and now we're moving just as strongly to the upside as we were down here. So again, it's one of those things. Do I want to short into a price that's going vertical 15, 20 pips at a time? 5, 10, 15, 20, more than 20 pips? No, it's a little scary, and it doesn't. I'm not about predicting the market. I don't really care what the market does. My only job, and what I have written up here on my screen, is it doesn't matter if I miss an opportunity. I'm not here to predict. What I am here is to trade really good patterns that match my trading style. So that's really all I'm out here to do. So I'm trading my own game. I don't want to get lured into what the market's doing. I don't. In a way, it doesn't matter to me. How I view my trading is that this is basically a puzzle, and in all of this action, I am trying to find my own setups that I trade. So I'm playing my own puzzle game, and the market's just doing what it wants, luring other people into making crappy trades. My job is not to take crappy trades, but instead, not get seduced by thinking, oh, I need to be in on this move. Oh, get in here, get out there. No, my only job is to check out, hey, what are the patterns doing? Where are my patterns playing out? What is a good risk reward? I'm analyzing the price to make sure that everything lines up how I want my trades. So far, very weak move to a new high. Very strong rally up. But in terms of being able to make progress to the upside, very weak at the moment. We'll see. Now that's changing. This is why we always need to wait for setups, triggers, so that we can analyze price and then determine if we want to take trades based on a trigger. So I'm almost always waiting for some type of pullback, and then now. So this is running very nicely to the upside now. Could look for some sort of trend continuation, which would look like this. We could also get something more complex, but basically it would have to occur after a trend continuation. We have a little drop, a little push up, a little drop that doesn't go anywhere. We start to move more to the upside. If you're watching the mouse, pull back, and then move. So basically, where is my curve tool? So basically something like this, and then we start going up from there. I like having the countdown thing on my chart because it kind of lets me know how much time I have. I'm waiting for a candle to complete this. This is the start of a pullback, so I can't do anything until that candle completes because it could shoot up, and then in hindsight it doesn't even look like we had a pullback. So we'll let this complete. We can also track the candle size right now. We know right now probably a 7.4 pip stop loss. Too big for me. My max is about 5. That way the price only has to move 10, 12 pips to get me a 2 or 2.5 to 1 reward to risk. But now little candles like this become much more interesting to me. Still have 40 seconds to go for it to complete whatever it's doing though. And now we can see we're at about a 5 pip stop loss. That's right on the cusp, 7. So we're going to leave this alone as well. So we already know. We can just talk to ourselves. I do this throughout the day, whether I'm talking to you guys or talking to myself. This is what I do the entire day. If I stop doing it, my trading generally suffers because I'm going to become more impulsive. Basically, I just spoke that this trade's now done. I'm not taking a trade. But if I'm not talking, then, you know, there's that tendency to maybe forget, oh, this candle's huge. Price starts moving up, and there's that like moment of impulse where we jump on our keyboard and, you know, buy right here, and then it goes up a little bit and comes back down or something, and we're like, why did I take that trade? And it's because we hadn't really reinforced what we were going to be doing. So right now I know that I'm sitting out, like, I like this trend continuation. We have beautiful momentum, nice pullback, but this is just way too big of a, because let's just look at what we'd need. So we're looking at almost a 10 pip stop loss. So even to hit a 2 to 1, we got to go all the way up here. Now that doesn't mean that can't happen. We are moving with a lot of momentum, but we basically have to move 20 pips just to make 2R. Whereas if we wait for those 5 pip, 4 pip, 3 pip triggers, then the price only has to move 6, 7, 8 pips, 9 pips to get us 2 to 1. So yeah, even though this looks like, oh, that was a beautiful move up, yeah, you would have been like, you would have made like a quarter R. You know, it's just not worth the risk of taking it. The other option is, which I will sometimes often do, is I'll just use the stop loss size I want. So here I have mine currently set to 5 pips, but maybe a little bit of slippage, you end up getting it up there. 5 pip target puts you what I call in an abandoned spot, in the sense that you're now sitting right in the middle of an old price bar. You're not below it. So it leaves you exposed, and this actually could have got stopped out on this because it kind of broke up, pulled back a little bit. So you could have got stopped out right on this green bar actually. So it's not an ideal situation. Now continue to analyze the price. What's going on here? So we had big difference here, 5, 10 pips difference. This last run up before the pullback went up 5 pips. So I would say, I can't type, slowing momentum. That does not mean I can't take a long trade. Just be aware that the price is no longer making the massive higher highs that it was before pulling back. So what does that mean? Well, maybe it means I use a trailing stop loss. If the price gets close to, if I know momentum's slowing, then, you know, if I'm taking a trade down here, maybe I take it near the prior high or just slightly above it. I can no longer assume that the price is making massive runs past the prior high, at least based on the current momentum. That doesn't mean it can't. The price could easily run 50 pips if it wants. I have no idea what it's going to do. But based on the recent action, which is all I know of what's happening, is that right now we're not making quite as big a higher highs as we were before. So pretty strong pullback here. Candle size 4.6 pips. That's not bad if I put out a 5 pip stop loss and a 12.5 pip target. We can measure that out. So if I was to go long after this trade, where does 12.5 pips put me? All the way up there. So that's, you know, in slowing momentum, that's pretty tough for it to go all the way up there, right? Because this last wave only went 5 pips above. So if we're a little conservative, we want to think, oh, well, maybe it'll just get to that prior high. So in that case, we're looking at about 6 pips. That's only about a 1.5 to 1 reward to risk. And decide if you want to take that. That would put you about a 5 pip target. and or a 5 pip stop loss and an 8 pip target. To put a target right about there. Again, and that's not because the market can do anything. I don't know that it's only going to go there. I don't even know if it's going to go up. But if we start to get the turn based on recent evidence, we have slowing in the sense that these highs are leveling off a bit. So now this one, 4 pips, that's a little nicer. Oh, I missed it. I was considering that one, but you know what? The risk reward was not great. So at a 4 pip, you could have used about a. Oh, that still would have been a 5 pip stop loss. So yeah, an 8 pip target right around kind of this prior high. It's not great. That's a little bit what I call chasing. Like would have made it though, but yeah, I was a little slow on the trigger there, so I didn't get in. And then let's see. We'll either see the same dynamic playing out where we stall out here, maybe just a bit above, and we see that slowing continue, or we'll get an acceleration of the trend again, which then lets us know, okay, we're accelerating again, next trend pullback, I don't need to be quite as conservative. But yeah, if we end up stalling out here, then that is slowing again, because last time we were able to get 5 pips above the high. This time we couldn't even get to the high, or maybe we'll eclipse it a little bit. So this is the scenario planning. It's just looking at what can happen, and then if, like I said, if this pulls back a little bit and then boom, shoots higher, now all of a sudden we move 10-15 pips above the high. That next pullback, I'm not going to be quite as conservative. On the flip side, if this drops back below this swing low, we have a possible rounded top type pattern, then I would look for a pullback. As long as the price is at a lower high, if it starts to drift lower, taking out a candle low, then we have a rounded top pattern. So that one, let's put the thing on it just to see. Probably would have got a bit of slippage on that, so would have had to enter there. 5 pip stop loss-ish. And what did we say? An 8 pip target. Yeah, so it wouldn't have got hit on that first rally, but it would have got hit now. So you would have had to hold through that little pullback. So now we have an acceleration again. We had a 5 pip move above this prior high, and we are moving, about 10 pips above this prior high. So starting to accelerate a bit again. Which means too, if you would have used your 2.5 or 2-to-1 reward to risk, you would have got hit because this move ended up bigger. In my opinion, that's a bit of a gamble because we had seen some slowing price action already. So I think a better target would have been right around these highs, to in this area, maybe max up here, which would have been 5 pips above the prior high, just like this one did. And just to assure that you get out, yeah, I would have wanted to put it there. Because, yeah, based on the evidence, I just don't know that this is going to fly 30 pips in our direction. Can only go off the evidence we have at the time. Don't want to make assumptions. So yeah, I missed out. Yeah, for me about a pip and a half of profit there. Missed. Like I said, I did like it. Just the risk reward wasn't great. So now same thing, playing out. We have basically no doubt about where the trend is. We're moving strongly again. Waiting for some type of pullback. Waiting for the pullback. Let me also assess. Again, gives us time to digest how strong the selling is on that pullback. We also have to wait for the move back up, so it lets us know we had strong buyers, some sellers came in, but now the buyers are coming back in. Yeah, so that waiting for that pullback gives us, quite a bit of information. If the price pulls back pretty deep, then we have a fair bit of distance to that prior high. If it's a little pullback, that tells us sellers are weak, and we'll probably be moving into new high territory. Related to that, if the selling is really deep, then that lets us know that sellers are almost just as strong as the buyers. So if we had a pullback all the way back down into this area, probably not going to be taking the long, simply because sellers have matched the buying strength. So this often happens. We have a bigger movement day. I didn't talk about it at the beginning, but my y-axis is always scaled, or at least right now. Daily average range is about 100, 110 pips, and so I always have my y-axis scaled to 110 pips. You can just scale it by going like this. And yeah, so now I've given a little bit of extra room. We're up to, well, yeah, right at about 100 pips right now. You can give it a little extra just so you can see some space above and below. So I always like to talk through my emotions. I'm talking a little bit more through this video, trying to explain everything. So this would be a little bit of a mistake having missed that trade, because I didn't mind it for, even though I was going for a smaller target, would have been out around here. Yeah, that's still 1.5R that I could have had on a trade that I thought was decent. But hey, that happens sometimes, or you have to run to the bathroom right when a good trade's setting up. Like, trading isn't always perfect, and even if we see a really nice setup, we're not always going to be able to capitalize just because something distracts us, or we punch in the wrong thing and then have to change it, and by that time the thing's gone, trade's gone. So that's just life in trading. So still going pretty strongly to the upside. Can see, slowing off a little bit, but not much. Vertical, vertical, vertical. A little bit of a pause here. I also look at candles. So you can see, like, pretty much all of these candles are just big blocks. They're closing pretty close to, here it opens and it closes pretty close to its high, it closes pretty close to its high, it closes pretty close to its high. These are all like big blocky candles, and we're seeing what I call a little bit more of the wicky or whipsaw type movement at the moment. This is kind of a hidden pullback, right? Because you had to move up to here, it dropped all the way down here, and then went, how big was that candle? Still 7 pips. Yeah, that's, could have used my 5 pip, and that would have put a target, at 2 to 1 at 10 pips, right about there, pretty close to where it got to. That would have been a 2 to 1. But again, yeah, these candles just pretty big for my style of trading. And I know other, people might be taking advantage of this, and great for them. Since I trade every day, I have very specific rules that I follow, because moves like this are quite rare, which we're seeing at the moment. Usually trading's more like this, so we have to develop rules that allow us to profit or avoid scenarios where we're not going to make money. And what matters is our profit at the end of the month. So, catching one big trend, yeah, we could make a lot of money, but if you lose money every day trying to catch these big trends when the price action's like this over here, then our monthly results aren't going to be good. So I don't care too much about how I trade each individual day. Obviously, I want to trade good, but as I said at the beginning, my only goal is to trade quality patterns that match exactly how I want to trade. So what the market's doing, it's like I said, it's almost irrelevant to me because I am waiting for the patterns, the context, the candle sizes. Everything has to line up how I want in order to take trades. And you know, to make 2% on your account in a day, even if this was all I captured today, hey, that's a pretty good day. If you can average that, that's 40% per month. Assuming there's about 20 trading days in a month. And usually we have a lot of opportunities throughout the 1-2 hour session that I trade. I'll usually have 5 or 6 trades. So average probably more about 3 are. And if you can do that, you can make a great living even off of a smaller account size. Part-time living, I should say, because you're only trading an hour or two, so you know, you can make a full-time wage in an hour or two a day. But it takes practice. It takes a lot of discipline. There are going to be times like this where, you know, the trade in itself was iffy in my opinion, but it worked out great. So that can lure you in to taking mediocre opportunities because you say, oh, that last one worked out. I would have made so much money there. But really, it didn't align with the strategy fully. So I would have had to compromise a little bit on this one, my risk reward, taking 1.5 to 1. And I don't mind doing that. Actually, the other day I took like several trades with 1.5 to 1 reward to risk because that's all the market was offering. When you have these small waves, you know, if you're picking pretty good entry points, you might only get 1.5 because that's as far as the market's moving. So let's analyze this. Really strong, tapers off, nice strong push again, pull back. So again, we are looking for a possible trend continuation trade. There's that part of us that says, oh my God, this has run up so much, it can't possibly go further. But hey, you never know. But I don't want to have a stop loss over 5 pips. Let's see, if we would have used 7, I don't even know what I never use a 7 pip target. So 14, you're looking at about a 17 pip target. So it would have hit a 2.5 to 1, but just barely. And again, another 7 pip stop loss there. You know, like, it's a little frustrating because the price is moving so beautifully, but it's just not giving us, right? Because at 2 to 1, assuming a little bit of slippage, you know, that almost ends up being a 9 pip stop loss. To put that stop loss in the ideal location, so 2 to 1, 2.5 to 1 is up there. My God, are we moving with a lot of strength today? Very impressive. But again, even though that move was nice, if you're risking that much, so far it's only moved about 1 R in your favor. But I can definitely say this day is giving me a little bit of regret for not trading some of these. Also, these what's nice about the price action right now is that these recent price waves, like it's running. We had this little pullback, and if you took that breakout above that wave, there's very little pullback. Same within this case. Once it broke above that wave, very little pullback after that, and it's just running. So that's nice in that it gives us that bit of leeway to use a smaller stop loss. So if I would have put out my 5 pip stop loss there, you can see all of a sudden 5 pips looks very small with these massive candles, but it wouldn't have got hit, right? Once we moved above that candle, it never came back. And then 5 pips, it may have actually got to the 2.5 on those first couple pushes. So analyzing the price again, we have stalled out a little bit. We could continue up, but at the moment, a little bit of a stall out there. Only moving a few pips above that prior high, which again is quite different than what we have just seen recently, where we're just surging above prior highs. Even if you considered this a little prior high, that tiny hidden pullback, we went 17 pips above. Now we're back to moving 5 pips above. As we saw in this case, that doesn't mean the trend is over. We could accelerate to the upside again, but at least for this moment, we had a slowing. Now, if we drop below this swing low, that would set up a possible rounded top. We'd have to wait for the drop below. Then a move up that stays below this high. Then we need to start to see the rounding over. And again, candle size has to concur. As you can see, using a 5 pip stop loss there would have left it very orphaned and exposed. So yeah, definitely some, what in hindsight are opportunities missed. You know, we had this one here, even this one as it started to move back up. So a couple opportunities to get in for that rally, but yeah, just a little bit of slowing price action. And what happens is, why I don't assume that this is going to take a massive run is because quite often this leads into another pattern, which I trade, the rounded top, where we start to see this slowing, and then you get a little bit of a dip, and then 6 pip stop loss there. This candle's about 6.3. So a move above, possibly tradable, but I don't like it into that slowing. So again, I don't want to be lured in by what the market's doing, trying to think, where is it going to go? I just want to trade my own game. Look for the patterns, the context that I like. It's always easy to see in hindsight that, oh, you should have taken that trade, but it's the decisions we make in real time that are, of course, determine our profits and losses, not just today, but over many days. So how good are our decisions over many trades? Like I said, this day, a bit of an anomaly, even for a non-farm payrolls day, just to have this kind of relentless trend that we're seeing. And I would definitely be trading this if we had some smaller candles, because basically I'm going off each one of these candles to set my stop loss. So let's consider these scenarios here. If we have a sharp move up, trend is still going strong, it's accelerating. If it stalls out in this area or slightly above it, let's say maybe up to about here, that aligns with this slowing thesis. So if we stalled out here a little bit above, now this swing, if we drop below that, so we go from up here to down there, then we see a move back up, but it cannot reach those prior highs and then starts rolling over. That sets up a rounded top scenario. So a lot of things would have to play out for me to go short right now, but that is the short scenario. So far, that playing out at the moment, but that doesn't mean at the moment we could not accelerate to the upside. But right now, there's no trade for me, so I can just analyze it thinking about the scenarios because there's no trade. Another thing that could develop is at any point we just have a massive decline which shifts basically anything that takes out these lows here, and then that just sets up a trend continuation to the downside once we get the pullback and it starts dropping. I will put in that was a bit of a mistake. Because as I said, those were pretty good candles. The actual thing that caused me a moment of hesitation is that I have my stop loss set to 5, and these candles were a little bit smaller, and I thought, ooh, do I want to reduce it just a little bit to, you know, if I increase my position size, reduce the stop loss, now if it only gets up to this high, I can make 2 to 1. And that little bit, that split second of, do I want to adjust my position size, and, you know, the price was already up here and gone. Could have gone in on the pullback, but that's actually, you know, I greatly respect the guys who, well, and I don't know if they're actually even trading or not, but the guys who run the chat rooms and could trade a 1-minute chart like this. I don't know if any of them trade the 1-minute chart, but, you know, can have questions and, you know, all that stuff going on and still trade. Like, it takes, like I said, 1 split second of hesitation, and you know, that trade's 5 pips above my entry point. So we need to be very yeah, I think I'm still going to leave that. So I wasn't analyzing the price action again. Almost had a little impulse there where I started to see it go up, wanted to take it, but we still have this bit of a slowing mentality here. Not really making the higher swing highs that we were, or we're still making higher swing highs, but it's definitely not the ballistic movement that we were seeing before. So again, in this type of environment where we're just sort of easing up, where would an ideal profit target be? Probably just above these highs, right? That's what we've been doing the last 3 price waves. So, you know, if that were to take that trade, what does that risk reward look like? Choosing that as our trigger. Man, that's still a ridiculous size. So using a 5 pip stop loss would have already been stopped out. Would have had to use the full 8 pip. And if we put a target there, 1 to 1 reward to risk. So based on the current price action, you know, that big candle with a target kind of here in alignment with what the price has been doing recently, a 1 to 1 reward to risk. And someone might say, well, you could put your 2.5 up there, and yeah, it may hit, but that's not what the price action has been doing recently. So again, if we had taken that trade, still wouldn't have hit that target sitting there, and that was again only a 1 to 1 reward to risk. So maybe this is the end, or maybe this is just the slowdown, a breather for the bulls before another big move. That could also be the case, just like what happened here. This is like pretty much the same pattern that played out. So we have a move up, slightly higher high, pullback, stalls out. So here we have a slightly higher high, pullback, stalls out just at a prior high, pullback. So maybe this scenario plays out again and we get another big push to the upside. This is just the breather for the buyers. Or we get the other scenario where we can see the prices a little more hesitant to move up, and we start taking out these recent swing lows and we set up a downside move. But either way, there is, at the moment, nothing I can trade, because The long side's obsolete for the sense that there's just not, these price waves aren't big enough for me to have a good target. Or the waves are okay, but the size of the stop loss, those two combined just don't present a good risk reward ratio. And that's all I care about. I don't care where the market goes right now. What I care about is what my risk reward looks like over 100 trades, over many days. So I'm not going to take something that's, you know, a shitty risk reward just because I want to make a few pips today, but I end up developing bad habits that affect me on, you know, it might have made me a couple pips today, might have made me 2 extra R today taking one of these kind of, you know, they ended up okay, but based on the evidence at the time, they weren't that great. And yeah, so I start developing bad habits. I start taking those trades on days like this where the price is not running, and all of a sudden your losses are magnified in this type of trading environment. And yeah, you end up using money expecting the price to do something when it's just not going to do it. One thing nice going on at the moment, a little bit smaller candle sizes. This last one down to, you know, 6 pips or so. So maybe in the aftermath of all this, we'll get a few more trades that I like, which have a bit smaller stop loss, easier target to hit. Right now, just chopping sideways after this big run. So I would consider a trade to the upside still if we got some small candles. So 4.6, that's getting close. At this point, we'd had the slowing coming in. So this is like a double pump pattern, but we'd had slowing movement coming in. So I would not want to assume much more than the price going here, maybe slightly up there. So maybe 7 to 10 pip target with a 5 pip stop loss. So that would have been the entry point right there. Again, I'm just not too convinced of it. It's about, I'm always thinking, do I really want to deploy money right now? Is this really the best conditions that I can expect? And yeah, when it's just, when your risk reward is compromised, when you really have to think, can I squeeze a profit out here? That's usually not a good sign. I also look at, even though this was a double pump, as I talked about here, big boxy candles like prices opening and closing distances apart, and not a lot of wicks on these candles. And then as starting here a little bit, we start to get these bigger wicks, which kind of shows more whipsaw action, meaning, you know, it went up and then the sellers beat it right back down. You know, these like really quick move up and then get slapped back. So all these things play into what that plays into, how the candle itself is acting, is how easy is it going to be for me to get stopped out, and also how easy is it going to be for me to hold this trade. So here, like let's say we'd taken this long, you know, we had this little pullback and we make a move above this red candle right there, so we could have gone long. Again, I didn't like it because of the snowing. Keep an eye on this here because we could start shifting below some lows there, setting up a possible reversal to the downside. Wouldn't trade it, we'd have to wait for the drop and then the pullback. But let's look at these candles here. So we can already start to see this a little bit over here. Like here, price pops above, moves up, and then gets slapped back. Same thing here, the price moves up, it gets slapped back. So if think about what your mentality would be in this trade. You know that momentum's slowing already. You get into this trade, it moves up a little bit, drops right back below your entry point. Then it shoots up, drops right back to your entry point. Those whipsaw type candles will affect, you know, your mentality in that trade. Now you could just say, well, I'm going to hold it no matter what, but we do want to analyze what the market is doing and that's going to make the trade a lot scarier. And then it pops up, and then boom. So worst, you'd probably end up having to get out here anyway, simply because at this point the trade's, it got rejected off that high. If it drops below this, we're probably dropping further. So yeah, it's just not ideal. So taking all that information in, that's a nice small candle. Well, still 5 pips. So now my question is, do I want to take this short? Right, because we've matched that low. We could start rolling over. $10 pips for those candles to complete. At that point, we'll have a little bit of like a 2-candle consolidation. So right now I have my finger on the sell button, but have not released it yet. I like to see the price push through. Now let's see to this one. Yeah, 2.4 pips. So again, I'm just holding the sell button, and then I'll release it if we start moving lower. Right now I'll take my finger off the sell button because we're moving up a little bit. I think I would prefer to see a bit of a pullback, and then some small candles and rollover, just that I know the pullback happened. When we get this stall out right near the prior low, there's always that question of, okay, we might just tumble lower, but we might get the little pop and then get the pullback. And so that's always in the back of my mind. I have a little bit more doubt with these types of trades where it drops to the prior low. This is a rounded top, by the way. So we can see these highs not making much progress. Now here we drop below a prior swing low. You could have looked at this one, but that was just, I think, a little bit of chop. This was the last move up. So I like this drop below. And then now here, we're basically waiting for a shift below one of these green candles, assuming the candle isn't huge. So we're up to, 4 pips, that's good. I have 5 pips still set up in MetaTrader, 7 pips. Again, not a huge shift down, so we could go right back up to the high. That would invalidate the rounded top if we move too high up. So 8 pip target, or 8 pip stop loss. That's too big for me. 8 pips, even at 2-to-1, puts your, even at 2-to-1, 16 pips away. Very reachable, actually. But I'd prefer if I got a smaller one. I should actually write down what my 6 pip stop loss be. That's not usually one that I have to use very often, but today we do have enough movement to possibly use it, so I'll put it down just in case. So far, nice candle there, 4.6 pips. Do I love the short trade? I wouldn't say. We haven't really had a strong shift down. What I also don't like is that we had this choppiness, then we had one drop. Basically this drop here. We've been moving sideways till then, and now we just erased it. So we basically erased any sort of selling momentum we had by this up move. So this is just looking a little bit too choppy to me for what I usually like to see is, right off that high, you get the swift drop. Whereas this has been really grindy to the downside. Right, even if we look over here, like the quick sell-offs quickly reversed to the upside. And these, it's taken a lot longer time-wise to grind away those gains. So yeah, I just don't really love this rounded top. It's a little bit too spread out. They're not seeing a lot of selling momentum. The idea of a rounded top is that we go from slowing momentum to a nice shift down, hard selling. And this is not hard selling. So it would be the word. It doesn't fit the overall idea of the strategy. So yes, the rounded top is there, but does it really show a strong shift in selling? I don't think so. So what does that mean? It just means I'm not going to take a short at the moment, but there's still opportunity in the sense that if we get the strong drop I want to see, then I can trade a trend continuation or a double pump or something like that. But I need to see that strong selling come in. Right now, this is just a bit too drifty. If we look at the recent price action here, kind of forget about this. We had this big movement coming in, but for right now, we are a little stuck, I would say. It would have been different if, we had this last push up and then boom, big sell off. But for right now, we seem to be kind of just aimlessly drifting without, before we had distinct buying momentum. And now buyers and sellers are pretty much matched recently, right? Like I pointed out. So even on that pullback, which was the possible and I don't know if it didn't even look like we got a trade trigger to the downside, but the evidence was there. We'd had this little drop, and it was offset. The buyers and sellers were equal. Do I want to go short based on this drop right there? Because this one was obsolete. It had been erased. So we're looking at two tiny little down waves. Yeah, just not the shift down I would want, especially after this kind of big uptrend. I'm not going long either, though, because it's dead as shit, too. Delete all these hypotheticals. But I should leave that little rectangle up because we are stuck a little bit. By we, I mean the EURUSD is stuck, which also means I'm stuck because I'm watching it. Nothing for me to do. And it is quite possible that we could drift in. It is Friday. It's the weekend. I'm hopping on a plane in a couple hours. So I could really care less if this does nothing. Heading on a little holiday. So to me, this was a bit of a mistake too. I talking through it, punching in the levels for you guys. Not to blame it on you guys, totally my fault. But yeah, I should have stretched out my target to what it should be at 10 pips. There was more than enough movement to allow for that. Even just based on this drop and then the move up, 10 pips moving very easily. So now that maybe looks like more a last push to the upside. But I really want to see this move out with some clarity. And you're going to see one of the concepts that I've already talked about when I talked about day highs and day lows. We are in this little range now. So what I would need to see is whatever happens, it can move back up a little bit, whatever. It's chopping around in here. That's the bottom line. I don't want to trade it. We need a definitive breakout. Doesn't have to be quite that far. But, a move out that distinctly clears this range. Then we need the wave outside. That means it could come back in a little bit, but ultimately, if we're waiting for a trigger, it needs to occur outside that old range. That shows me that, the price broke out, it tried to come back in maybe a little bit and failed. Same thing for the upside. That could also happen. We could have a big thrust from wherever. It could happen, we pause up here, whatever happens. Thrust out, again, doesn't need to be quite that big, but a distinct move outside the range, It has to stay mostly outside that old range and then turn up, and that turn up needs to be outside the range. The trigger needs to be outside that range, because that lets me know it broke out, it pulled back, it tried to come back into that range, it failed. At the moment, I wouldn't say there's anything I'm too interested in trading. This is actually a pretty big range. Once we scale it back out, now you can see the 5 pip scale again. So this is a 20 pip range-ish. 20 pips, but we still have massive candles, right? All of these 6, that was 11, that was 6, this one's 4, so it's a little bit smaller candle. But which way are you going to go? Are you going to go up? Are you going to go down? Who knows? Because buyers and sellers are equally matched. You had this sell-off going from all the way up there. Almost a little stair step down. You have a little stair step up. Exact same momentum. We're stuck. So you may find, if you get like a small candle in here and it starts moving up or down, there is enough movement to the outside, to the edges of this range, that you could possibly take a decent risk reward trade. If you find a 3 pip candle, and it's like here you did have a bit of room to the upside if these candles were small, but it's just not a high probability play. So I'm not going to trade in here. Oops. So yeah, we're just stuck. And there's that, you can get into that prediction game, right, where we start anticipating which way this is going to break out. So you think, oh, well, we just had a bigger drop, could play the drop, we're going to have a big breakout. But really, we're evenly matched. And yeah, we did have some strong movement coming in, but we don't know which way this is going to go, and it could chop around a lot before it does have a big breakout. We don't know how long this is going to last. It could chop around right in the middle here, making you lose 5 trades in a row before it ever even moves to the edge of the range again. There's no strong conviction at the moment. So I would rather just hang out and wait. Overall, right now, we do have a slight bias to the downside. And we also had the slowing upward momentum that we had talked about. So I do like this for the uptrend slowing and possibly reversing. It's just that matter of when is the market going to present a good opportunity to get short when it's not so choppy. And that will mean missing the first move. As I said before, I didn't mind missing that rounded top because there's a scenario that plays out. If this would have started dropping and I missed it, I still get the trend continuation later. If this accelerates to the downside, gets us out of this choppiness, then I still get the trend continuation trade. Once we have this scenario, so we had this rounded top, which I decided not to trade. Let's say, because this sometimes happens, and then we get, let's say, one here, where we had this drop, pull back, drop, Now the price moves above that swing high just a little bit, pulls back. Some people might think, oh, there's another rounded bottom, I'll trade that and I'll go long. And yeah, that might work out. But what are we reversing? We came into this rounded bottom sideways. So there's nothing to reverse. It's basically just a visual anomaly of the range where you just happen to have one swing low that's a little bit below another one. And then we happen to have a pop up. It's more of a random event as opposed to this, where we have a strong trend coming in. So this was actually a fairly, other than the facts that I pointed out, that it was really choppy and there wasn't a lot of selling pressure in here compared to the buying pressure. And then by the time we would have got a trade trigger, the selling pressure had been totally erased. It's just not, so it just wasn't great, but at least we were reversing something. We had and we're still trying to reverse this uptrend. So here, little candles, just note this, I always look at the size of the waves. So even if we hadn't traded this, as the downtrend starts, if this is the start of a downtrend, again, we're just theorizing, thinking about the scenarios, drop 7 pips before moving back up. This one dropped about 4 pips, from a possible trigger candle. So again, we have to consider the size of these waves in order to take a trade. Still very grindy to the downside. Also grindy to the upside. We have no one in strong control. This is 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 nobody in control. We are still essentially stuck in this big range. Now, as I said, if you get a small candle, let's say we started moving toward the upside and we started doing this to the upside. If you had small candles, if you had a 2 pip stop loss on a small candle, and then you could trade these 5, 6, 7 pip drops to the downside, because that still is giving you a 2 to 1 or 2.5 to 1 reward to risk. But right now, when you have a 5 pip candle and the price is only dropping 7 pips, it's just not enough oomph to compensate you for your risk. Especially if you have to pay, if you have bigger commissions or you have a bigger spread. My spread, it's about 0.1, maybe 0.2 pips at times right now. So the spread's not an issue. But again, you gotta, if you're going for 0.1 or 1 to 1 reward to risk, 1.5 to 1 reward to risk, and you have to pay a commission, you're dropping yourself to a reward to risk of 1 or less. So there's just not enough movement. So I'd much rather wait for this scenario where we get this hard plunge and then trade the continuation. At least then we'll have had one wave that was strong to the downside, and right now we do not have that. I'm just going to zoom in a bit here so that I can see. I prefer the 5 pip price scale as opposed to 10. Just a personal thing. So now this is moving out. We haven't, we haven't definitively broken out of this because it'll depend on what the next pullback does. If the next pullback goes up into here, then we're probably going back to the upside. But if right now, we're only about 5 pips outside that range. Just took out that candle low. But if we drop a little bit further, or even if we kind of, pull back and kind of pause outside this range, we could go back into it a little bit. But I don't want to see the price wiggle out and then get a trigger outside that old range. Why does that work? Because anyone who bought in here, the last sort of place you'd want a stop loss for anyone who took a short-term trade in here was this area. So once it breaks below, that clears the stop losses, and now it gets to determine, are we going back into that range? Was it just a false breakout to clear the moves and the buyers actually want to take it back up? Or is this a strong enough move where, you know, once we get back to this area, anyone who didn't get out yet is now nervous and takes that last chance opportunity to get out? So I like this scenario. The continued push a bit lower sets up a better probability for a downtrend trade. News, I find, is often reversed. I'm not going to say it's going to happen this time, but how big is that candle for? So take a trade there. I think it might have been a bit soon. Hadn't quite dropped below the low of that candle yet. Sometimes the problem of being zoomed in a bit too much, or zoomed out a bit too much. But I have a 5 pip stop loss on that boy. And I feel I'm just a bit early. Yeah, she's fast approaching. Ooh, didn't quite get there. At least now we have a legitimate trigger in the sense that we did drop below those candle lows. My target at 10 pips. So that's a 2-to-1 simply because it's a little bit bigger stop loss. Make sure it's set where I want it. So, pretty close to being stopped out there. Let's see, I may get it, if it doesn't drop quick, I may get out of this one kind of around break even because it seems to be chopping around a little bit. It's nice to see that drop there. That's the drop we wanted. So let's look at how. So that drop, yeah, that was only about 7 pips before it stalled out. So I am aware of that. We've been moving a little bit. Let's get my scale right back to. So I am going to move my. See if this drops. If it doesn't drop here, I'm just going to get out. Okay, I'm out. And just, yeah, I wasn't quite. Oops. Yeah, just kind of scared me out. We'd, again, looking at what the price action has been doing, you know, 7-8 pip drops. So is my 10 pip target even really reachable? I think it probably is overall because we could just be starting a downtrend, but the thing about this is when we don't really go anywhere, I think I might have made, no, absolutely flat on that one, including commission. So So yeah, out there, 0R. So just being aware, like if the price isn't doing quite what we want it to, we want to give it a bit of time, but just considering the context of everything, is 10R even, or not 10R, is a 2R trade 10 pips away even really feasible? Can always look at entering again. So I entered again. Now we're starting to see a sell-off again. Had my target set to 1 pip instead of 10 pips, so we'll adjust that. So basically took another trade here trying to drop. The problem is, now my entry point is, quite a bit worse than it was, but we have a little extra confirmation that, the price is trying to drop again. We'll see if it kind of just fizzles and we're not really going anywhere, then I'm not afraid to get out again. But hopefully we get a little bit of momentum here. Because I had my target in the wrong spot. I want it right on about 10 pips or so. And let's see if we can get some oomph. So at the moment, let's analyze this. We had a little drop, and then it stalled out right there. Pulled back. Now we've had a little drop again, and it's stalling out just below that prior low. So not great movement to the downside so far. We need to see something that tells us we have some acceleration going. Make sure these levels are right. 84, 10, 5. I always do that. Some fractional pips. So I'm going to move my stop loss to just above this candle that's forming right now, because we are now well into our profit. So that guy was a 0R. So I do have my stop loss. I am protected if it gets above there. So that's 10. So, if it pulls back a little bit and breaks below, we go for our full. Where's our 12.5 would be right about there. No, I think I'm going to leave it at 10. So where does that put my profit level? 38.4. Getting out right now. Basically, if I would have trailed my stop loss down, it would have gone right there. Yeah. Like I said, we're also coming right to the end of where I usually trade. I usually trade till about 8 o'clock. And we're getting toward the end. And like I said, I got to hop on a plane, get ready for that. So I'm okay with closing out for the day. What do we make on that one? Yeah, only about half an hour. Not great. I still think we probably have more downside, but it's been a little choppy. So see if more opportunities develop for you guys if you're continuing to trade. But for me, I'm done. That was plus 0.58R. And again, it could have very easily continued sticking with that trade. The stop loss was up there. I had moved it down here, so that would have been stopped out at basically flat, or like 0.01 R or something. So I'm yeah. And then why did I get out early? Because just what we had talked about during that trade. This is moving pretty choppy to the downside. All these waves are small, right? Here we had a little pullback. Where does the wave go? It stalls out 7 pips. This one stalls out 3 pips. Then once it gets going again, it had already moved 8 pips. So that was a bigger move actually than all these other ones I've done. So based on that, with a 5 pip stop loss, I probably actually maybe should have used a 7.5 pip target, and that would have been hit for 1.5 to 1. I would have made a little bit more. That would have been in alignment with what this downtrend was doing, right? Because all these waves were small, 5 to 7 pips. So because we had broken out of this range, I thought, okay, maybe we'll see a little bit more acceleration to the downside. But I also have to keep in the back of my mind that all these waves have been small. We can't assume we know what the price is going to do. We have to trust what it has been doing. And based on that, we just didn't have a lot of downside selling momentum. So trust that. I tried to go for 2R. It almost hit it. So that was basically a trade-off. Do I want to go for 1.5R and it maybe hits it based on this movement? Do I want to try? But I kind of hedged my bets with a trailing stop loss. Moving back up, so we could have a trend continuation where we head back up into this old range, or we could sell off. But either way, I am done for the day, and I'm going to pack my bags. And hopefully you pick something up. I do feel, there was a lot of movement today. I feel like it could have been better, but at the end of the day, when you get to write down that your account increased by 2.12 plus 0.58. So we're up 2.7R, 2.7% for the day. Hey, that's not bad. Usually write some notes for myself. So just kind of letting myself know that at least in real time, I felt I traded well. I can always come back in when I review this day and compare it with multiple other days and say, like, okay, I've noticed this and I can make improvements here. I could have actually captured some profit there. But really, I think the only thing, I missed this one. That was a bit of a mistake. And overall, I think these were good decisions. Is draw in, I got it right around there on that first one. And ultimately these were the right decisions. We didn't have a lot of selling momentum, choppy down waves. Maybe this one could have used that would have been adapting to the price action a little bit better, and could have made an extra R there. So these like small little changes, but again, either way, I am done for the day, and hope you enjoyed this, learned something new, and until next time, happy trading.